Hi everyone, it's Stuart here, and welcome to our final session for the TPP. We are looking at building a profitable trading routine today, and for some reason, I've had all sorts of technical issues this morning, so I'm a couple of minutes late. So I apologise for that. But let me just switch this off because that's not working for some reason. A trusted prop trade is it's not voice connected. There's only me here. I'm going to drop out of that, so I don't know if that's going to work or not. But anyway, hopefully those of you that are here or you're watching this on catch up, we can get something out of this session today. So, final session: building a profitable trading routine. Routine, one of those really boring words, isn't it? But as I've said in the previous sessions about risk management and money management, and the psychology of trading, knowing yourself. It's these soft skills, these 4 areas that we've touched on over the last month. They're absolutely fundamental to staying in the markets, being successful initially when you first get your account, whether it's a 1-step or a 2-step, and then you get your funded account, and it's keeping that funded account going. So it's working on these soft skills all the time. It's not really about the stuff we looked on at webinars at the beginning of the week, where we looked at strategies for scalping or strategies for swing trading, or there's thousands of strategies out there, and they all work well enough. It's these soft skills that people fall down on, that where things go wrong. So not having a routine or not sticking to a routine because it's too boring, it's too rigid, or sort of stuff. My mum or my grandma used to talk to me about all the time. Do this all the time. Clean your teeth, brush your hair. When I was at school, it was putting a tie on to go to school. It's all that sort of stuff, and that's what profitable traders will tell you time and time again. It's all about having an edge, understanding yourself, trading up something you understand, obviously, and then leveraging that. Using good leverage at the right time, using a sensible use of your margin and your account if you're trading accounts like that. So it's really all about you, as with any good trading strategy. So welcome everyone. Let's quick through. I've got a few slides here, not very many, because I tend to talk too much. So I'm going to try and cut it down, keep it to 45 minutes today. Obviously, any questions, please stick it in the box. Or if you're on any of our social media platforms, stick it in there, and I will endeavour to answer you as we go through this session. There was lots of questions last time when we talked about trading psychology. A lot of this is a repeat of, not a repeat, but it's related to what we talked about on those sessions as well. So it's a bit of a wrap up. So routine is key. Those of you who don't know me, my background is in the City of London. I worked for a big UK bank and then an international bank for many years in the City of London. Then I moved the family to Cyprus at the beginning of 2002, and I worked for a number of European brokers based in Cyprus. Cyprus is a hub for European brokers. It's got great pool of people. It's a great place to live and bring your family up. That's certainly what we did for 20 years. And the laws are very clear and understandable. And it's it's a great place to live and bring your family up. So my approach to trading and investing has always been the same, really, back from when I very first started back in the 90s. It's always, do what's probable, keep it simple, and find a time frame that fits me. Certainly as a trader, I found that quite difficult to find that. I'm quite good with routine, and I'm a bit of a bore, so that was okay. My biggest problem was wanting to be right all the time. Not that I wanted to, losing money was a pain, but wanting to be right all the time, a bit of a sort of told you so. I'm one of those horrible sort of characters. But once I realized that was part of my set psychology, unfortunately, I worked on sort of fixing that, or working to not make it hinder me as a trader. And honestly, it was like a light bulb going off and a release. And now I just, trade when I want to. I trade a time frame that fits my, lifestyle. I trade when I want, as I say, when I want to, not when I have to. And I'm not trading to make money in that sense. I'm not trying to make a living from it. I am making money from it, but that's because of the routine and the process. I'm going to say that word a lot again today. We talked about routine. I'm going to talk about process, because that again is what really, really successful traders have. They have a very simple process that they stick to, and that's what makes them successful. But I say for me, it was always about knowing yourself, do what's problem, and keep it simple. So today we're going to look at a routine, why it's important, why it works for me. I'll talk about risk management and money management again, and obviously any questions you may have. So welcome everyone, and I hope you are all well. And you, the boss is obviously here. Welcome everyone. Please feel free to ask questions. So if you go into the dictionary and you ask it, what's routine mean? You know, there's adjectives, there's nouns, there's verbs. You know, a routine, a situation, action, or event is one which seems completely ordinary rather than interesting, exciting, or different. And that is just classic of why successful traders are successful, because they're good at this sort of thing. Most people, you see the stuff you see out on the internet, you know, it makes trading exciting and interesting. I'm quite interested in it because I like the mental action of sort of seeing if I'm right or wrong, obviously, but the mental action of actually trading. But the excitement is overblown in all the stuff you see on the internet. You know, you see these guys sat by their swimming pools with their great big wads of cash and their Rolexes and their very exciting lifestyles and their ridiculous cars wherever they are. Yeah, that all of that is possible. But you know, all of those guys and girls that are, you know, successful traders will also have a routine. They will know what they're doing. They will have repeated that. It's like any successful business person has a routine. They go through a strategy. They have a plan. They stick to the plan or they amend the plan. It's like any, you know, good business. You know, if something isn't working, stop it and change direction. If it is working, do more of it. Find the bits that aren't working, improve them. Can we improve them? No, well, let's change them. You know, use your routine to describe activities that are done as a normal part of a job or a process. So this should be part and parcel of what you do every time you trade, whether you're trading, you know, for an hour a day, 30 minutes a day, or 8 hours a day, or, you know, once a week, or once a day. Whatever it is, try and get through this as a routine. So remember when we were looking at the mindset business, you know, this business is a mindset business, and to keep your mind focused, you know, there's nothing like structure. The problem is, as human beings, the psychology of it is we fight against that. Most of us are not very good with patience. We're not very organized. Some people I know are very, very organized, but are not very organized. So we got to get some sort of structure and process into our trading. Otherwise, the market does appear like this chaotic series of events that are just out of your control. You can't do anything about. And that's true. There's lots of the events in the market you've got absolutely no control over. You don't know when Trump's going to send a tweet out. You don't know if, you know, if the next piece of news is going to be positive or negative, or it comes out positive but the market treats it as negative. All that sort of stuff. You have no control over that. So don't try and jump ahead of that. You control the things you can control. And that's why you get process, and that's why you have routine. It brings you into that. So it's great to have, you know, trading platforms. It's great to have economic analysis. It's great to understand charts and all the rest of it and have news feeds. But really, the business of trading is yourself, and routine is part and parcel of that. So regardless of your trading style, whatever you're trading, whether it's, you know, 10 assets, 50 assets like I do, or one particular asset on a one particular time frame, you know, all traders thrive on routine. And if you haven't got a routine, my friends, stop absolutely right now and get one. Write one down. You will have a routine. You might not have thought about it. You might not have structured it. It might not be a very good routine. You might be doing all, you know, lots and lots of things wrong. You might be getting really excited when you're winning. You might be getting really down when you're losing. That's a bad routine. You've got to try and normalize that. You know, you might not even, you know, you might read the newspapers all weekend before you open a trade on a Monday morning. You know, trading, the best traders, you know, they're boring, they're repetitive. That's what makes it so powerful. Because if you can find these little edges, these little nuances in the market, you know, that's all you're trying to do. You're not going to be the next Goldman Sachs. You're not going to be the next Morgan Stanley. You're looking, as individual retail traders, you're looking to take a little bit of money out of the market on a regular basis. You're looking for consistency. Consistency builds confidence, and repetition helps with that as well. And having a process fits in with that. So repetition, repetition, repetition. Find what works. There are, as I say, there's thousands and thousands of strategies. I can show you, literally hundreds of different strategies that work. It's the application of the strategy by the individual trader that makes it a success, not the strategy itself. Hope that makes sense. If it doesn't make sense, ask me. So for me, again, this repetition note here, that's something that's worked for me over time, realizing that what I was doing wasn't working, so I had to stop and find something that did, and find a time frame. My time frame is the higher time frames. I find personally the higher time frames less stressful because you're only having to look once or twice a day. I put my trades on at the end of the day and see what happens. Wake up in the morning, see what happens. I'm not awake in the middle of the night worrying about, has it hit profit, has it not hit profit? Because I know if it doesn't hit profit, it turns around and goes in the opposite direction. I always have a hard stop. I have a stop loss, and my stop loss is not going to be more than a couple of % of my entire account if it goes wrong. And I have lots and lots of losing trades. It's the nature of what we do as traders. What's going on there? So it really is all about you guys, as I said. So let me just find what's going on here. Okay. So yeah, routine. Yeah. So tell me. You tell me what your routine is. I'm going to show you what I do, what my routine is. Henry Ford, failure is simply the opportunity to begin again, this time more intelligently. So if you blow an account, or you blow your first step, you have to go back and start again for step 1 and step 2, or you've only got 1 step and you blow it. There's nothing wrong with getting things wrong, blowing account. I've had, and I'm sure speak to any successful trader, they will have had blown accounts, and that's all it is. It's just analyzing. I'm going to talk about a lot about that in the next half hour as well, about analyzing everything that you write down. Here is my well, this is a 2025. I'm just using this actually calendar, but I used to use, this is 2024. This is 2023. Everything on the trading day, I write down. I write down in what's going on, the news, the actual major news of the day, what I feel like, what's going on, what's the weather like, because all of that impacts you as a human being, and therefore that has an impact on you as a trader. Have you followed your routine? So it's boring. It requires all the soft skills we've talked about over the last month. So we have structure, patience, discipline, and it's also continuous learning. I'm in my, in my early 60s. I've been doing this for over 30 years, but I'm constantly looking at something new. Young guys can do things. Young traders can do things differently to how I started and how I did things, and a lot of them are much more successful than I am. The only constant is change. I remember an old boss of mine saying that when I first graduated. The only constant in change, and that is in our lives now is even more so than it's ever been, isn't it? As life is charging along. Markets are the same. Markets are getting faster and more volatile as the robots, more and more of trading is automated and the algos take over. A day like today, for instance, the end of the week, Friday, always can be quite interesting. But you add that to the end of the month today, and there's all typical end of month volatility. Big players have to balance up their accounts. They're accountable for the month of May. How did we do in May? The board are asking, or the boss is asking. So if you haven't, hit your profit, or you got too much of a loss, running into this final week of the month, or this final day, final session of the, that's when lots of things can happen. That's why you get this crazy volatility sometimes on these final trading days of the week and the month in particular. So we might get that today. You add to, again, today's a key piece of news come out earlier. The PCE, the Fed's preferred measure of inflation. That's inflation's been the focus of central banks around the world and what their interest rate policy would be like. So, you know, you add all that together, and if you've got no routine and no structure to what you're doing and how you're analyzing the markets and yourself, you know, all of that can come along as a bit of a surprise. So structure, patience and discipline, you know, continuous learning, continuing improving. The only change is constant. So have a discipline. I'm sure I put this one up, but I should have made that a wee bit bigger. But yeah, you know, I've written these down before, but you know, golden rules for new traders, but more on a different way. This is a logo I've used many times from Positive Trading. What we're talking about today is this preparation bit. This fits in here, but really, trading very much is, you know, managing yourself, managing your emotions, managing your brain and your and yourself. It's not about, you know, technical analysis. It's not about chart patterns. It's not about, you know, drawing trend lines. It's really all this stuff before yourself, getting yourself in the zone, getting yourself calm, understanding that this may not go wrong. How do you deal with losing? But part of that, you know, preparation is everything. You know, if you don't plan a style or a way of trading, you know, you are planning to fail. So preparation and routine helps with that as well. You know, so three key things. Obviously, every successful trader has an edge. How do we find our edge? Well, just about yourself. As I said before, you know, get the mirror, look yourself in the face. What sort of risk profile can I accept? Can I cope with? You know, have an edge, create your own edge. So whether that's the market that you're trading, so whether it's gold, whether it's I know a lot of you trade crypto, but do you trade crypto or do you buy it and hold it and hope it goes up? You know, do you buy it, you know, on technical basis? Do you buy it on news basis? You know, how do you, and that's what you've got to find out. What makes you tick as a person, as a trader? And part of that is the routine. So if you're expecting it to go down or go up to a certain level, you don't do anything until that. So you've got the ability, the patience, the discipline to wait for a price to be corrected. You know, if you're trading that on a long-term basis as a buyer, you know, that's fine. If you're trading it on if you're trading 1 minute time frames, that's the same thing. You still got to wait with the discipline and patience of a trader for the candle to complete, whether it's a 1 minute candle or a daily candle. So find the market or markets that work for you. The style of trading. Are you a trend follower? Are you a mean reverter? Do you want to be trading everything and anything? Are you happy to be in a market and add to a position, as we demonstrated yesterday in the well, we talked about adding to positions as scalping on Monday, and then it was a great demonstration yesterday. I think it was the dollar. Was it the dollar yen that was going down on the 5 minute chart frame? It was trending down all day. And as a scalper, you'd have just been adding in all day. In and out as it waved down. As a swing trader, you would have gone short at the beginning of the day as it went down on your sort of 4 hour or the 1 hour candle, and just either added to your position or stayed in it and trailed your stop loss down as the position went down and bagged lots and lots of pips at the end of the day or the end of the session. So that is the most important thing. As I say, it's not technical analysis. It's not you know, it's not having an EA that works for you or anything like that. It's finding what works for you as a human being. Okay, and then the strategy, as I say, whether you're trading on a tick chart or a 4 hour chart, what works for you? Because some people don't like trend following, and it always amazes me when I come across people that hate trend following trading. But that's because it's always worked for me. Some people like the routine of being able to buy and sell at turning points, at pivot points. So they're sort of mean reverting traders, expecting, you know, news to move a price to this level, and then, well, I'll fade that trade a bit, like we saw yesterday. Yesterday was another great example of a mean reverting. We had this. We had the announcement from the judges in the US that Trump's tariffs most of them were illegal. Stock markets ramped up, the future markets ramped up. But when the cash market opened, we'd already given up half of the gains we'd had in the futures market before the over-the-counter futures market and derivatives market, and then the cash market give all that back basically. So, and then during the day, it was announced that the president was going to appeal that finding. It was a judge, it was a judge court that had been filed against them in the past. So we're back to where we were by close of yesterday, and then this morning, as far as the stock market's concerned, again the futures market sort of bounced a wee bit before the cash market opened half an hour ago. So, it's all about the time frames again. If you were trading that intraday, you'd have been lots of volatility. If it was just another day, it's just another candle. So it really is all about you. So the routine is key. So how do we trade? So steps I do, steps I know other traders do. So for me, if you're gonna, whatever session you're trading, whether it's the relatively quiet Asian session, whether it's the noise and announcement and the massive pickup in volatility and volumes when Europe opens, or the very intense overlap between London and New York session, check the news, what's going on, have the calendar beside you, be prepared about what's going up. I know 4-hour traders or end of day traders will do a lot of this prep at the weekend. They don't do a lot particularly overnight. They will plan, well, this news is coming out on Wednesday. There's nothing newsworthy is going to happen till Wednesday. So I'm only interested in what's happened between Monday and Tuesday, running into Wednesday's big news, and then I'll trade that news, or I'll trade the impact, the follow up from that news, or that sort of thing. Other times, if you're trading on a daily basis, on a session basis, see what's happened in the previous couple of sessions. So check the news before you open your trading. What's happened in the last session? Obviously, particularly important is the US session. Regardless of what you think about America or the United States or the current president, the US is still the world's biggest economy. The dollar is still the world's most dominant economy, currency, and will be, certainly in my lifetime, I expect. So what happens in the US affects all of us. So have a look there, whether it's the credit market, whether it's the stock market, whether it's the commodity market. What happens in the US impacts us all. CNBC, CNN, Bloomberg TV, Reuters TV, all that news is all US focused. So obviously, if you have a setup, run your scanner or checkups. I don't know how many of you do that. I have a scanner. I run it. It flips through my 50 assets quite quickly. I'll actually show you a copy of it later on as well when we finish this. But how long have we got? We've got nearly half an hour gone. We'll have a look at that in a minute. So scanner, what might happen, what has happened, whether you're doing it every 4 hours. So where are we now? It's 3 o'clock. Next one would be 4 o'clock on mine if it's a 4-hour time frame. If it was an end of day time frame, there's still 6-7 hours to go before the day ends here. So something might be looking good, but it might all turn around in the next 6 or 7 hours. Anything could happen in the US session, like we had yesterday, is a great example of that. So have a watch list of possible probable trades before you actually open your trading. Have a look at that, scan it, see if it's looking. How many you have on that list of possible probable trades, it's down to you as an individual. Again, I can't tell you that. Obviously, as a scalper, you probably won't have anything like that, will you? You're just going to react to what the price action is telling you. But still, as a scalper and as a short-term trader, you still should have a very strict routine about what you're doing, particularly for the next slide when the trade is open. Okay, so if you are setting up your trades or potential trades, have some price alerts set or some time alerts set. The news is coming out at 12 o'clock or 1 o'clock. Check my gold position, check my euro position. So get into something, again, that works for you. When the session's open, concentrate on what your prep is. I see, and again, I was guilty of this. Organizing and routine was quite good for me, but I quite often, with the activity of the session when I was actually trading, I got quite often distracted by what was going on and didn't execute the planned trades. I was get pulled away and ended up trading on a 5-minute time frame when I'd been planning to only trade on the 1-hour time frame, all that sort of stuff. So have a plan, stick to your plan, and then, execute accordingly. Something I haven't actually touched on yet, but implicit in everything we do as profitable traders is to have a risk and money management plan. We talked about that in the 2 previous sessions quite in depth, but always stick to your risk and money management plan. If you've got to always trade with a stop loss is my mantra. I know a lot of you don't, but that's up to you, because with a hard stop, not a psychological one, or not one where you think, oh, it's a roundabout there, yesterday's high or whatever it is, put it on the market, put it in your trading platform. You know how much you're going to lose before you press buy or sell. And that's one of the great benefits I find personally of the TradeLocker platform. As I said before, I've been around for 30 odd years with trading platforms. TradeLocker is new, it's quite sexy, but what I really like about it is the simplicity of putting on your stop loss and knowing exactly percentage wise and money wise how much you're going to lose when it goes wrong, because that's what you focus on. How much am I lose? How much can I be prepared to lose? If losing $500 is too much, if losing $5 is too much for you, you need to change your setup, change your mindset. The other big thing, as I touched on earlier, write stuff down during the live session. What is going on? What was said? What was the data that came out? Why did you take the trade? What was the level you took the trade? What else was going on? Was the sun shining? I know it sounds really stupid, but things like that, honestly, have helped me become, the successful trader I am, because it's the soft things that have really helped me. So write things down as much as possible, obviously real time. There's all sorts of great software now when it comes to journaling, coming to getting your stats, everything. I mean, lots of basic stuff from lots and lots of different platforms. I'm sure you're all aware. If you want some pointers, let me know, and I'll send you in the right direction of places and people I think are really good. But there's all sorts of really good automatic trading journals now that are out there. Some of them are quite expensive, actually, not worth the money they're asking for them. But some of them are very straightforward, and you don't necessarily need to use them all the time. Once you get into using them, and I found that I use them, absolutely all the time as a regular routine. I'm less rigorous about them now, but that's because I've been doing it for so long. But and again, as we touched on last time, in the live session, if you get tired, you get exhausted, overtraining is a big problem with many traders. Revenge trading is another big problem with many traders. Staying in front of their screens for too long, or on the phone for too long, trying to get back, using bigger lot sizes because they've had a few losing trades. You've got to keep an even mind. Fear and greed are the things that drive the market, and that's what we've got to stop or manage and get on top of. So once your trading session's finished, whether it's the close of the day, whether it's the close of the week, whether it's the close of the hour, because you've got to go off and do something else, make sure you've got everything written down. How did you do, both monetary wise? That's only one aspect of successful trading, the monetary gain or the monetary loss. Too many people focus as that being the be all and end all. I've seen so many trading plans that people have sent to me with just, I want to make money, I want to cruise around the world, I want to retire, I want to buy a house. That's not good enough. Get some more detail on there. Get some more real ideas and real plans and real routine, like we're talking about today, into that. So make sure everything's written down. Analyze your performance. As I said before, it's not just about your trading performance, but your personal performance. How do you feel? Do you need to go and away for a weekend? Do you need to look at quiet times? Do you need to get more sleep? Do you need to drink less coffee, stop drinking alcohol, all that sort of stuff about yourself, about your own personal performance as a trader? How is that all impacting you as a trader? And believe me, it does. All of that does. Of course it does. Also, what happened, what didn't happen, and how did you react to it? So if we're doing all of this in real time, a lot of it you can write down, and then you'll be amazed at some of the scribbles. I mean, just look at my book here. if you can see that. I mean, look at it. It's all sorts of dribble written down there. But I've got, 30 of these. These are diaries. These are trading diaries, and they go back years and years. And you'll be amazed when you go back and skim through, even if you're just flicking through the pages, or what happened the 25th of April in, 1999 or 2005. You'll be amazed at the sort of things that start to come out. You'll start to see some things like, Tuesdays. I've always seen this every time there's a problem. It seems to be on a Tuesday, or Friday afternoon is not a great time to be trading. Jatin, I don't know what I've said that's so true, but yeah, hopefully it makes sense, my friend. And all of that sort of stuff, when you write it down, you just flick through it. I mean, you can't read my horrible writing, but that's what I'm doing. I'm an old guy, so I still use paper and pen and a book. I just like having books around. Loads of trading books behind me here. So, all of that stuff is all I'm trying to say. It will be really powerful, and you will look at it. I thought, the pound CAD, for instance, as an asset was bugging me for some reason. And then I went back through it, and it's like, oh God, yeah, look at that. Pound CAD. I think I've told you this story before, haven't I? I think I had 7, 8, 9 consecutive losing pound CAD trades over a period of about 6 months. Every time it came up on the system, it was like, after it happened 3 or 4 times. But I think I'll have to actually look up the data. It was a long time ago now, but I'll have to look it up. And that so every time then it sits in your subconscious about, can I take this trade this time because the last 8 have all lost. That's just part and parcel of trading, and that's part of the routine, or that's part of the information that comes to you when you have a routine. And that's all it is. Write it down, review everything, review the charts, review the setups, review you as a human being is key as well. So they're my sort of bullet points. There's nothing new there. There's nothing radical there. It's normal behavior, and that's the sort of place we want to be. So always spend time when the market. The other key thing as well, I found for me, again personally, this is just what's really worked for me, is if I'm trying to analyze stuff and the market is still open, or Bloomberg TV is still spinning around, or CNN is still blaring on about the markets, I get distracted because of the nature of who I am. So I've got to spend time, whether it's at the weekends, the end of a month, or when everything's switched off, switch all my screens off, to do the actual review quietly, with a cup of tea or a cup of coffee, with nothing else going on. A couple of the other things, have a different. I used to have screens, 1 or 2 screens for analysis, but then I would have my trading platform over here. So I'd get up, do the analysis here, get up physically, and go and place the trade here in a different part of the room, and that would, that helps my mind. There's all sorts of strange things I've done to help my routine and help my trading skills. One of them was, I think I've told you this story before as well. I put, not for very long, sounds a bit perverse when I'm speaking like this, but I had an elastic band around my, it was actually my left wrist, not my right wrist, and I used to like, it was when I was trying to trade on short-term platforms. It was like 5 and 10 minute time frames. But at the time, I didn't know the feed I was getting was 15 minutes delayed from the real price. So that's how long ago it was. So my broker was giving me data that was 15 minutes. 15 minutes behind the real price, and I was trying to trade 5 and 15 minute time frames. So there was absolutely no way I was going to ever make any money doing that. And at that time, one of the ways I tried to deal with that was I had an elastic band around my left wrist. I used to like extend it and hang myself before I didn't have 2 trading platforms then, before I actually went and placed a trade. So all sorts of different things that fitted in with my routine. So it's it's where it goes. Sorry, I do speak too a lot of the time, but again, guys, remember, it's these soft things that it's not the sort of stuff that I can teach you technical analysis. People can learn technical analysis. People can learn about economics. People can study politics and how people move and how our markets have moved. But the soft skills of being a successful trader are something you've got to work internally on yourself. So things like patience and discipline, not getting too scared when you're losing, not getting too confident and overconfident when you're winning, thinking you're indestructible. Not taking lot sizes at positions that are too big for your account size. Understanding the actual thing you're trading. I mean, there's loads and loads of people that don't understand the actual thing they're trading. They like to trade gold, but they have no idea about what it. Obviously, we all know what gold is, but how the market for gold works. What how where it comes from, where it's mined, all that. So the big companies that are involved in it, who owns the gold, all that sort of stuff. So you owe it to yourself to do all that, as much background preparation, as I said at one of those other slides, before you start risking any of your real money. It's these key things, these structures, these processes that will keep you in business. And again, any trading book you will read, one of the best ones I ever read long time ago, The Reminiscence of a Stock Operator it's actually by a guy called Edwin Levere, but it's a French Canadian guy. But it's about the notorious, infamous Jesse Livermore, boy trader, made $100,000 back in the 1920s, 3 or 4 times, one of the world's most successful traders ever. And it was all about risk management for him, even though he ended up blowing it all in the end and committing suicide. But what a character he was. And again, his success was all down to process and understanding people and understanding what he did on a daily basis and the assets and the information and the markets he was trading. So it really is important that you understand yourself. So what we're looking for as successful traders is consistency, because consistency builds confidence. And consistency comes in lots of different ways. If it's £1 a day or $1 a day or 50 cents a day or 50 cents a week, whatever it is, if you're doing that on a consistent basis, you can very, very soon become a millionaire. It's that simple. Consistency is the key thing. Sorry, let me just take this thing off. Sorry. Is the key thing, and that then builds confidence. So it's a matter of, again, it's process, doing the same thing every day, and that's what works for me. As I said before, review everything. It's more important than chart or economic analysis. Review everything else that's going on. If you floundered trying to trade forex or try to trade gold or cryptos burnt you, try and focus on one thing. I remember a few years ago, in Kenya, I was talking to lots of guys in Kenya, and Kenya's a big coffee market, and there was lots of people had lost their way, and a few of them in the room were actually worked for coffee processing companies, and they knew the coffee market. So I said, look, what drives the coffee market. That's where you've come from. So try with that. I know some of them were successful trading coffee on the back of ground of what they knew in their small business in Kenya. But that was their market. For me, when I first started, it was telecoms. It was the internet was just starting off, and I was working in telecoms, and the telecom companies were the infrastructure, the hardware infrastructure that was creating this thing called the internet and mobile phone networks. So master one asset, time frame, and but most importantly, it's got to fit with you, fit with your personality, with your lifestyle, and the way you want to make and manage your account. Always check your stats, but as I keep saying, it's these soft skills are by far the most important thing. And the fear and greed will never go away. Okay, you've got to aim to try and manage them. Some people say, "Oh, you can't trade with fear. You got to trade. You can't have you open a trade and you hope it wins. You've got to get rid of hope altogether. You don't hope that a trade is going to win. You don't hope it's going to not lose. It's going to do one or the other. So you just got to accept that that's going to happen. So we get rid of hope. We manage our fear and greed. We don't get too scared. We don't get too cocky. We manage our patience and our discipline, and always keep on top of our emotions. Don't get too carried away when we're winning. don't get too down when we're losing. Keep your emotions in check. Okay, and that's really most of what I've got to say today. These are old slides here. Actually, let me just go back to this one. This is the other thing that people talk about all the time. This is from the previous session when we talked about funded traders. Most people, whether they have we're talking about routine today, but most trading strategies or trading approaches, with have their routine, they plan it out. What they do is usually quite successful. And this was proven many, well, it's not many years ago, about 10, 12 years ago, this survey was done when a major broker at the time looked at 43 million trades over a 15-month period. One of their technical analysts there looked at 25,000 individual traders, both small $50, $100 traders up to the $50,000 account traders. 43 million trades over 15 months. And these were the stats that he found. They had a typical win rate on their trades of 62%. So 6 out of 10 trades won. So 6 out of 10 trades won. There were 62 were winning, 38 were losing. However, when they won 48 pips typically. The key one was that third line there on that chart. The fact when they lost 82 pips. So they lost 1.7 times more than they won, and that's what trips people up. You've got to keep your losing trades small, and that should be part of your process, and that should be part of your approach to trading, and parcel of what you do on a daily basis, and part and parcel, obviously, the routine we're talking about today should be part and parcel of that, keeping losing trades small. Because if we look, as I say here, we do the math. So you're losing on average 140 pips. If you'd flipped that the other way around, kept your win rate at 60%, and you were winning 82 pips on average and losing less than 50 pips, 48 pips, what a massive difference it makes. And that is the simple maths that's involved, my friends. Jatin, what was that you saying? Maybe when they won, their quantity was more. Yeah, well, Jatin, well, lot size is key as well. But this was actually, we were talking about win rate and total pips gained, basically, is what this was, and this was the problem, and it's continuously the problem. This was done about 12 years ago, and if you look at any broker, any bank, any hedge fund now, you would still have this similar sort of not hedge fund, but any retail trader, any non-professional people trying to make money in the markets. This is exactly what they do. They tend to hang on to their losing trades because they don't have a stop loss. So something goes into negative, Jatin, and they just hang on to it and they forget about it. They open another trade, they forget about the fact that they've lost, and it just it'll come back. It never comes back. You've got to be brutal when you're losing. Cut your losing trades, okay? And keep on the right side. Even with 40% win rate, they will still profit. It was reversed. Exactly. That's what a lot of people don't get. You don't have to be super successful at this. The problem is, Jatin and everybody else, when we go to school, and I've talked about soft skills about our parents and our grandparents and our families. We're told to be the best we can, aren't we? We're told to get 10 out of 10 at in our tests, get 100% in our tests. It's June next week. It's exam time in many parts of the world in June. So everybody's trained to do get 80, 95% in their maths tests or their English tests or their geography tests, whatever it is, isn't it? In this crazy business that we call trading, you can get things wrong half the time and still make money. You can even get things wrong, as Jatin's just said. You can get things wrong 40% of the 60% of the time and still make money with those stats. That's absolutely correct. Most people, the problem is, Jatin, is that most people's psychology, most people's brains can't cope with that. They can't cope with losing 6 out of 10, even though they're still making money. That isn't how we're programmed as human beings. Wherever we are in the world, whatever we believe in, whatever religion we're from, whatever culture we've been brought up in, if in the trading business, in the financial markets, you can be successful by getting lots and lots and lots of things wrong. It's not sexy, it's not promoted, but you know, you can, and many people do. Some of the most successful traders I know don't trade very much, but when they win massively. But you know, that doesn't fit me. I need to be trading more, and it doesn't fit most people. I can't wait. My patience isn't good enough to wait and wait and wait. I had a friend that was in 2016. I think I told this story last time. He was losing every single month of 2016. September, October. Trump came in and surprisingly won the market. And he's not a Trump fan or anything like that politically, but he saved his year. So October, November, December, the final quarter, saved all of his previous losing 9 months. I've never had a year like that, and I'm not sure if I'd be able to cope with it, to be honest. But he did. But yeah, he ended up flat for the year. But he was massively down during the summer. He's very, very depressed about it as well. He was talking about giving up altogether, but he kept going. And the surprise of Trump winning the election in 2016 took him to a flat year, and he was very successful in 2017. So. But anyway, yeah. Sorry, I've tired 50 minutes. So routine, process is what you know successful traders are all about, my friends. So you know, as I said before, patience, discipline, and control. Wait for your levels, indicators, and candles. Stick to your plan, and keep on top of your emotions, greed, and fear. And having a plan and routine obviously helps that an awful lot. Okay, so thank you for your time today, my friends. If you got any questions, sorry, let's go back to previous slides. If you got any questions, oh, they're going the wrong way. Oh, sorry. If you got any questions, stick them now. I've got a few minutes left. Jatin, Singh, anything you want to ask, please do so. I want to go back. Yeah, so if you've got any questions, it says funded trader, but it's the same slides. Okay, well, thank you for your time, everyone. If you're not with us, please come and join us. We're here to help you. We are the proptrade.com, and here's our website. If you're not aware of us, I'm sure you are. Our trade, our phase. Sorry, our products. I'm problem speaking. Our products are available 1 step or 2 step, 1 phase, 2 phase, standard phase. There's pro phase as well if you want. If you're interested in 90% profit share in your funded account, have a look at the pro challenge account. The market start from $5,000 upwards. It's not a massive equity. 25,000 is the why isn't it opening up? Why this challenge? There we are. Is it gonna? There we are. So at the moment, we've got a huge one-off discount available, 30% discount on our £25,000. Sorry, $25,000, $50,000, anything over $25,000 account. So if you put in buy May, BYEMAY 30, that'll get you a massive 30% discount off of already very well priced $175 $25,000 account. So if we apply that, you can see we get that down to 120, just over $120, gets you $25,000 of equity to play, to trade, and practice all those soft skills we just talked about. Okay, if you got a few $100, your $240 gets you a $50,000 account, gets you a massive $100 off the standard price of $345. You know, trade with confidence, trade with people you understand, and you understand the market. You know, we're looking for 8% on the first step. You don't want to be losing anything like, you know, these levels, 10% of your account. That's, you know, that's for losers. You know, keep it tight, and then you get through this the 2-step challenge, 5% only on the second step. And then, you know, you've got 80% of all the profits you make thereafter are yours to take away and withdraw. You can withdraw every Friday. You know, we haven't messed about anybody. You know, we're open, we're transparent, we're here to help you. We've been around the block many, many times. All of us that are here at the proptrade.com. We want you to be successful. We'll be successful if you're successful. You go and tell your friends. Stick it on Trustpilot as well. There's lots of dodgy stuff on Trustpilot, or there has been, hasn't there? They've cleaned a lot of that out. So, you know, the stuff on there is all getting tightened up all the time. But the real money can be made from these practice accounts, these simulated accounts, practicing your approach, practicing your techniques, and we are really here to help. You know, there we go. Look at the leverage. Understand what that means. You know, do you want to be trading news? You know, get things in your head and make sure you know what you're doing. Okay, so thank you for your time, everyone. As ever, we'll see you all again on Monday. I'll be back on Monday. I can't remember what I'm doing now on Monday, but I'll certainly be back. Have a great weekend, everyone. Take care, stay safe, and let me just leave you with my 3 favorite trading books of all time. Okay, take care, everyone. All the best. Bye bye. Chatting, that's fantastic news. Well done. Best of luck. If you want to keep in touch, my friend. All right. All the best.